need to close your positions or roll over and have an expiration strategy?
Yes, that again is a good question, especially when it comes to futures and options on futures. There are they're products that have a defined time expiration. So in the stock world, you could buy a call or a put on Apple, and typically they've got expirations anywhere from every month to now 3 times a week with the bigger stocks. So Apple, IBM, Cisco, Amazon, there's many more products that are able to be traded on the options floors, and you definitely need to be aware. It's even more important on the futures exchanges because there are expiration dates for each future. And the easiest way to look at it is the US financials. They're really the simplest product because they only have 4 expirations annually, so it's each quarter. And so you need to know that the third Friday of each quarter, and the way they work in the financials is it goes January, April, June, September, back to January. So it basically you have 4 times a year that you're going to be rolling over the product. So the third Friday in June, which is where we are right now, you're going to expire, and they start expiring a week before, and you need to know when that expiration is. Otherwise, in the sense of oil and beans and things like that, if you don't expire and you're long, they're going to ship you bushels of soybeans or gallons of crude. So you definitely don't want that to happen. Same thing with livestock. Any of this stuff that trades real items, again, you have a multitude of players. You have speculators, you have commercials who are those that are producing the cattle to sell at the meat markets. You've got oil, all the different producers there from natural gas down, and they look at those products. Sometimes they want to take delivery because they're going to use, in the sense of airlines, they buy futures all the time knowing that oil is going to be used in their airplanes. So they'll try to lock in prices, and then when the delivery date comes, they're like, okay, ship me my oil. I was long and we're in the money, but I bought it cheaper, so now I want to take delivery on that oil. So depending on the buyer and the seller, some people do want to take delivery of the product. But if you're in the business of speculation, you definitely want to have a calendar. Go to the CME website or the CBOT. Any exchange that you're looking at, the different options exchanges, they all tell you when the expiration is. With options on stocks, if you sell 10, it's like having 1,000 shares. So each contract, usually in the stock world, is worth 100 shares. So 10 contracts is the equivalent of 1,000 shares of whatever stock. If you're buying puts, that gives you the opportunity to sell. If you're buying calls, it gives you the opportunity to buy. If you're selling calls, that's the same as being synthetically short via a price. If you're selling puts, it's like, again, being synthetically long. So all these different expiration terms and dates, you definitely need to have calendars if you're going to be active in these things. If you're not, you're going to get into a situation probably that is going to be pretty uncomfortable. And there's always a way out of it, but it's usually more expensive and it takes more time than you probably had originally anticipated, especially if you're just trading. So be aware of those expiration dates, understand the products, how they work, make sure you're out of them a week early. That way you've got a couple days if you forget. But the rollover usually starts a week before the expiration. Get ahead of the curve. That's when most pros get out. Don't wait for the last minute when it gets all like strange. So expiration dates on options and futures, very important to understand them, read up on them, and make sure that you've got a good understanding and following before you even begin to get into those more exotic instruments.